welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by CommercialAgentSuccess.com. Check it out. It is the ultimate in commercial agent training. Learn more at CommercialAgentSuccess.com. You know, one of the sectors that has really kind of blown up over the last many years, really, probably the last 10 years it seems, is multifamily. And the multifamily investment sales, percentage of investment sales of all sectors has just gone crazy. It's really, there's more multifamily selling than anything. Well, why is that? What is the future of multifamily? Why is there all this demand? Let's find out. Please welcome my guest. It's Kip Sowden. He's chairman and CEO of RREAF Holdings. Kip, thank you for joining us, sir.
Michael, thank you for having me. It's a pleasure to be here.
Well, I'd like to ask you, some things that the audience would be curious about kind of multifamily moving forward, and some of the things you see from your desk. And you guys just recently completed a portfolio, a $534 million portfolio of 21 communities. Tell us a little bit about that and about the location interest to you.
Yeah, happy to. So our multifamily platform or division is one of 5 within the company. We'll say it is probably the fastest growing, and we're extremely bullish on the multifamily space in the southeast part of the United States. That's where we're seeing population growth across, really all commercial real estate sectors benefiting from that growth, but particularly multifamily. The portfolio that you're referring to, we called Transcoastal 21, and it involved the acquisition of 21 properties, 3 different sellers in 7 states throughout the Southeast, a total of a little over 4,000 units. And it is right down the middle of the fairway for what RREAF Holdings looks for in, buying multifamily today. I mean, we're looking for, value add, opportunistic buys. This particular portfolio was attractive to us. As I said, it was actually 3 different sellers, but locations were, there were 7 properties in Savannah, Georgia, 3 properties in Mobile, Alabama, 1 in Greenville, North Carolina, Macon, Georgia, New Orleans or Slidell, and 1 in Tallahassee, Florida, 3 in Houston, and 3 in upstate Arkansas. We're active in all those markets, and it was a very complementary portfolio to our existing portfolio.
Yeah, and you had partners there, DLP Capital and 3650 REIT partner. So institutional capital it really has an interest now, I guess, in those cities, I guess, would all be considered maybe secondary or tertiary markets, right?
I think that's correct. In fact, we started this platform focused on secondary and tertiary markets throughout the Southeast. At the time we started that acquisition program, we were able to buy at 100 basis points to 150 basis points higher cap rate than if that exact same asset was located in a larger MSA. And we were hoping that the debt and equity wouldn't figure that out, but sadly they have, and as a result, there's a tremendous amount of competition in all of these markets today. And we're seeing cap rate contraction, and you're getting it's much more difficult to buy in these markets.
Yeah, and lenders like Freddie Mac really will love the space, right? Even though it's those types of markets.
They do. In fact, most of what we do in that vertical or that platform is geared to agency debt. Quite a bit of Fannie, and the last $800 million has been Freddie Mac. We did another portfolio that we closed less than a year ago involving 12 properties. Those were all financed with Freddie Mac on floaters. These 21 were financed with Freddie Mac on 10-year fixed rate loans.
Okay, excellent. So Kip, some folks are kind of looking at the cap rates that multifamily is bringing today and raising some eyebrows, but yet we're seeing incredible rent growth. What do you guys look at that in regard to the cap rates you're having to pay to acquire assets today and the future growth of these assets?
The cap rates that you've got, cap rates have contracted such that you've got to believe in the markets in which you're acquiring and that you will continue to see, rent growth. Obviously, having debt as low as it is today, affords for some spreads on cap rates versus, at what price you can finance. And that is likewise helpful.
Yeah. I remember I guess it was 07, 06 and 07, I lead a company that sells investment properties around the Southeast. And as we were doing our pro formas, we kind of knew that the cap rates wouldn't stay that low. And as we're trying to figure exit cap rates on our underwriting, we're like, hold on, what cap rate will we use on exit? We know it can't be this low. How did you guys look at that?
We will stress, any assets that we're looking at, and our exits are going to be 50 to 100 bips, higher, depending on the overall business plan for a particular, asset or group of assets. We do think scale matters, and we're seeing more and more, institutional capital wanting to write the bigger checks in these secondary and tertiary markets.
One of the things that people are concerned about in the multifamily world today is, as these rents continue to rise, is really the affordability. How many tenants can afford to pay these? And I guess this portfolio in particular, kind of fits into that kind of affordable working family range. What do you guys look at as far as the percentage of a tenant's income that you could allocate to housing and still be safe?
Well, in underwriting, we're going to want to see, a 3 times to a 3.5 times, the monthly rental rate in income being generated by the household. And, we do have a diversity of assets within any portfolio from, assets that would be considered A to, B minus even, all within one portfolio to cover a wider range of the tenant base.
Okay.
In a particular market.
And a couple of maybe easy, quick questions for you. Revenue management, you guys like it? You use it?
We do not. We do have in-house property management, REAF Residential, and we spend a lot of time on, knowing the markets, watching what our competition is doing, and want to, test the waters as it, relates to what we can achieve without compromising occupancy. And it is, different property by property, location by location, and really dependent on what capital has been allocated to a particular, asset and what condition it's in.
Right. And you guys self-managing too. You have a little more control that decisions are being made proactively and actively. I think one of the things with the revenue management, and if some of your listeners aren't familiar, revenue management for apartments is kind of like it is for hotels or airlines, right? The price may be different day to day, depending on the computer program. And a lot of A-class communities use revenue management, and it seems to be very helpful. I remember when I started in this business, I started running a management company, and we didn't have revenue management. And I had these fake names and accents, because I would call and find out everything about my competition so that I could price my properties appropriately. I guess with the type of properties that you guys have, I guess there's a lot of pets and things in those communities, right?
Yeah, there are. We allow, pets. Again, it depends on the community, and it depends on, there's different size, maximum size per, animal. And so,
Yeah,
but we do, yes.
That makes sense. What about co-living? You guys getting involved in that at all?
No, no. There's going to be a primary on every lease, and um, we do not.
Right. And if you guys in the apartment world that are listening or watching know what that is, but if you're not, co-living is where the landlords even get involved by renting apartments out by the room, kind of like student housing, if you will. And some landlords are doing some of that, which is kind of interesting. When you look at the multifamily market moving forward, Kip, what's your biggest concern for the industry?
Well, I think that if we see, I do not believe that cap rates can stay as low as they are today, and prices that are being, paid for, multifamily assets. You're going to see much more, new construction. Those spreads are widening, and I think that supply will come up and meet demand, but I think that's further into the future in the markets at which we focus. I think that the South and Southeast is seeing just explosive population growth, greater population growth than it's ever seen, and demand for multifamily and housing in general continues to increase, which will give, I think, multifamily a longer run in this part of the country.
Yeah. We're talking with Kip Sowden. He is chairman and CEO of REAF Holdings. And Kip, you guys also do ground up development. Obviously, you're doing renovations and things on a lot of these communities. Talk to us a minute about construction cost and kind of the impact there on your existing properties and your new developments.
Right. So in our ground up development platform, again, we are really focused on areas where demand exceeds supply, and supply cannot readily come in to meet that demand because of barriers to entry. And in that particular vertical at REAF, we are building to exit to institutional capital. And we can theoretically build any product type anywhere in the U.S. that meets that criteria. But I will say that in our ground up development, we're currently developing hospitality and multifamily. Multifamily that we're developing. We're just finishing a project just north of Nashville in Gallatin, Tennessee. We've broken ground on 2 projects in Central Texas, and again multifamily. And then through another vertical, we're building extended stay hospitality in growth markets just throughout the U.S.
How is the volatility of construction and labor costs impacting these developments today?
Well, it's significant. I mean, obviously, the cost of material has gone up, and then there's a labor shortage. So, you've got to know and plan ahead of time as best you can. And we are, at least as it relates to multifamily, our own general contractor. We have REAF Construction Services. And so we're constantly, keeping up with, our need for building materials and buying, ahead of time. We'll lock in prices.
Another, I guess, rapid fire quick question. Security deposits, you guys still do security deposits or anything new related there?
No, nothing different. And yes, we still take security deposits.
Mm-hmm. Okay, excellent. So the rising construction costs and labor costs, do you think that's slowing down when you're putting the pen to pencil on these new developments? Is it slowing down new development? Is that another reason that buying existing product can hold more promise?
You would think it would slow down new development, but it's really not. I mean, I think that, a lot of developers are seeing such great demand, and when you look at the rental rates that are achievable in a lot of these markets, new development still makes sense. I mean, we're always looking to, have 150 basis points to 200 basis points, between, cap on cost versus market cap. And with cap rates as low as they are today, that's not hard to do. So you are seeing new development in spite of the increased cost of construction.
Right. Well, Kip,
Now, I think it will slow down as cap rates tick up.
Kip, what would you leave our audience with to think about regarding multifamily moving forward?
Well, we're going to remain extremely bullish on multifamily. We think there's, opportunities to make strategic buys throughout the Sun Belt region of the United States, and really the Southeast even more so. And we are very bullish on the, air quotes, workforce housing space, the, B plus quality multifamily to fulfill the population growth, or to work towards fulfilling the population growth and the need for supply.
All right. Well, Kip, thanks for joining us, sir. Appreciate it.
My pleasure. Thank you for having me.
All right, and thank you for joining us around the country. Please let us know what you think. Thank you for sharing the show, and subscribe if you haven't done that. And hey, please share the show with your connections. And until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Buxton. Take leasing, site selection, and due diligence to the next level. Make the right decisions with on-demand mobile data. Visit buxtonco.com. By Bull Realty. For proven commercial real estate asset and occupancy solutions, contact me. My email is michael@bullrealty.com. By Commercial Agent Success. Expert-level commercial real estate broker training. Cloud Access 1, up to 21 one-hour videos. Visit commercialagentsuccess.com. Thank you for reviewing, subscribing, and sharing America's Commercial Real Estate Show.